Coming up in this show, I'm going to bring you my comments on the markets. Harvey has a sample for you of future speak. Great lesson in cycle analysis on the euro. I'll bring you a hot minute looking at soybeans, a very weak market. You'll be able to see a special. You're going to get a ton of our information just for $30 for 3 months. This is great for new members. This level 1 membership. Don't scroll through that one. And I'm going to bring you my analysis of the stock market with a short-term view of SPY.
Well, I'm going to the city and I'm gonna do a silly show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in coming weeks, and hopefully lots of great ideas and opportunities for you throughout this show. Well, the stock market got the news it wanted, with inflation softer in the US, though still raging in the UK and EU. That didn't lift the indexes for long, as focus on the banks, especially PacWest, kept the indexes range-bound, plus all that discussion, of course, on the debt ceiling. Markets were dull early in the week, waiting for those inflation numbers. But there was action in individual stocks as PayPal moved down sharply. Their earnings beat, but margins were bad. Disney, similar. Earnings were okay, but streaming is very weak and they're losing money in that division. And crypto moved down sharply. Coinbase suspended withdrawals twice on Monday. There was a ton of orders. They're saying over 400,000 that were stuck in the queue. I'm assuming lots of those were sells. And Bitcoin was down all week long. Now, the timing is right for Bitcoin to make a short-term bottom, and there may be a rebound coming soon. But a head and shoulders has formed, and that is trouble. And it does look like there's a potential for a decline in Bitcoin and crypto through June or July. The CPI and PPI, both slightly softer than expected, and both brought those temporary lifts in futures, but they failed. Though the bond market moved up, and that mostly held its gains during the week, as a Fed pause in the next meeting or two, the odds of that are rising. For the stock market, well, it has a lot of problems. Of course, there's that debt ceiling issue, and those emergency funds are running out. You know, it hit the debt ceiling long ago. Yellen is now out there talking calamity. I say there's a spending and debt problem, not a debt ceiling problem. Yellen should say that, and she should be telling the administration, stop spending money at a rate that we cannot afford. That's why we have these problems. There is likely to be some way that both sides on this get to look like they're winning. So maybe we'll get some very short-term can kicking while they say they're still negotiating. I hope they are negotiating, and that probably gives the market a little bit of a relief somewhere in the next several weeks or maybe month. And then after that, of course, there's plenty to look at that are problems. Regional banks, that issue is not over, and we're sure to hear more problems there, and that is what has been weighing on the Russell, and the Russell really has been a great leader in this stock market as far as cycle analysis goes. The Fed, well, the pause is on the table, but we're likely to hear more and more about the fact that U3 is very low. In fact, it's at a record low, a decade's record low at 3.4%. And some of the Fed heads are out there already talking about that there may be a need for more increases. I actually think what's going to happen is that there will be a pause, either starting in the next meeting or two, and they're going to stay there for a long period of time. There is no pivot. And if anything, the odds are pretty high that after some period of pause, and there's not any significant recession, not any significant increase in wages, in the unemployment rate and wage issue, that inflation issue is still a problem, then maybe after some pause in 2024, rates will be rising again. Of course, markets do climb that wall of worry, but we've seen that already as the markets have moved up. And we can't lose sight of very high valuations now. In fact, the valuations are historic outside of the pandemic bubble, which at the end of 21 was at that 200% of GDP. And the market leadership is very narrow, with the AI stocks leading the way and lifting that NASDAQ. And when a slowdown, potentially a recession, really hits, there's also going to be an earnings recession right with it. This is all going to make for some wider swings ahead in the stock market, as now it's in a tight range. But then there's probably going to be a breakout soon. And I'm going to show you that in the short-term view coming up. With all that, our analysis suggests that the bulls still have an edge for a while. And as we get into this mid to late summer, we think there is more risk. We're only giving the stock market upside potential right now, 3 to 5%. Then there is big downside risk. Here we are early on Friday. I'm recording a little bit earlier than normal here. And the indexes are mixed for the week. The NASDAQ is the best with some small gains. The Russell and the Dow Jones, both really the worst. The Russell moving down because of the bank issues. And Disney weighed on the Dow Jones Industrial Average, so that made that weaker. Bond market about unchanged on the week, maybe slightly better as yields edge slightly lower. The gold market, it's down small, but you have to really look at silver to see that there are issues here. It was just in the last couple of weeks that we started to warn about these metals markets and that it looked like they were putting in some short-term tops. Now, silver down $1.70 on the week. That is a big downside move as it hit resistance. And in the short term, there is a breakdown. So for those of you that are our level 2, 3, and 4 members, you'll be able to see that in the Future Speak show. Or for level 3 and 4 members, you'll get my chart update this weekend, which shows this breakdown in silver. And that is very likely going to weigh on these metals markets for, well, some time out into the summer before then a more favorable period hits. Dollar gains about 1%, and it's still holding near those recent lows. And you're going to see RV's analysis coming up on the euro dollar and how that is positive. That means that this little positive period where the dollar is rallying is likely going to be limited on the upside. Oil, again, about unchanged on the week as that moved up into some resistance, and now we think that the oil market will be moving down sometime into early June. That's it for my opening comments. I want to make sure that you do go to askSlim.com. Get acquainted. I'm going to show you this level 1 special for $30 coming up if you're brand new or a free member here at askSlim. Upgrade and get that $30 special for 3 months for a ton of information. On YouTube, do subscribe to our channel. Click the notification bell and like this video. Give it a thumbs up. On Twitter, follow me at askSlim. And any questions you have on anything that we're going to bring in here, or memberships, education, analysis, write to Matt at askSlim.com. This is a sample of Future Speak. Arby's going to share his analysis on the euro US dollar, which is bullish. We expect that something good for that is going to happen starting pretty soon. This is normally Future Speak, included in Future Speak, which has 24 different futures contracts and indexes, and is available every Wednesday for levels 2, 3, and 4, with tons of follow-up information after that also. Arvi, show them why you think the euro US dollar is bullish.
If we go ahead and shift over to the Euro USD, now this is just acting really nicely, and it does favor a move back to the upside shortly, which is why we are looking for a move through the old lows in the US dollar. Here in the euro, there is a low right on this minor cycle that's due in the next week or so. So you can see this is right now just holding high. We are looking forward to turn right back to the upside and rally up into this level right here that we have been highlighting for many weeks, right around that 112.5 area here in the Euro USD. If we move over to the daily chart, there is a short-term bottom that's due 511 to 519. You can see we have a higher cycle high here versus that high right there, and a very likely higher low versus that low right there. So the highest odds would be in that next rising phase that we would move through these old swing highs. Okay, so that is what the highest odds are. Now, I just want to add in one more fib for you here, which would be the 78.6. Let me make sure this is anchored, and that is at 1.0887. Okay, so we have the 61.8 at 1.0931 and the 78.6 at 1.0887. Those are our two levels here on the downside that you certainly want to keep in mind as we get into the later stages of this short-term corrective period right there in the Euro USD. As you can see, not giving up a whole lot on the downside, which makes sense because we're not seeing any kind of move either in the US dollar index in this period, and that is really quite bullish for the Euro USD and quite bearish conversely for the US dollar.
Great work on that. This is a hot minute in soybeans. We're going to look at multiple time frame cycle analysis. Let's take a look here at the soybean chart. We're looking at a side-by-side where we're looking here at the soybeans in a 10-year weekly, and we're looking here at a 2-year daily. We're going to blow this up. This is a little different than the normal way we show charts because we have the colored phasing in here. Green phases or upward phases in the cycles. Yellows are the neutral or peaking, and the red is the declining phase. And when the declining phase is negative, you can see that it is susceptible to some big downside declines. And you'll notice that that's where we are right over here. I want you to see the rhythms in the market. These are the cycle brackets right over there. And this cycle over here turned negative. That was a key. That said the next one would likely fail at resistance and then begin to move down again. And that's actually what happened. Let's take a closer look right in here, and you can see where we are now is in this red area where the soybean market is likely to be moving to the downside. This points out to mid to late June for this declining phase with a potential downside here of around 1335. This says that rallies are likely to fail here in this period if they try to get a bounce. Let's take a look here at the daily chart. You'll see a similar activity. And this is really important to see when you look at these cycles. Notice here where it broke that support and then fell very hard right there. This was after making a right shoulder and a head and shoulders top, and it came down and exactly hit the target. Here you could see it has now come and broke down that level. It says that the next rally will likely fail, and it did right over here in that sell zone. That was a very brief upside move, and when you look at here, you're seeing that, well, this is pointing out to, let's just look at this date right there, out to mid-June, just like the weekly does. So this cycle on the daily is synced with the cycle on the weekly. I want you to note in here that the slim ribbon PO, I'm just going to make this a little bit bigger in here. When the slim ribbon PO is positive, momentum is positive on the slim ribbon, you get these upside resumption arrows that you see right over there. That's a good market, likely to keep moving up. Then it turns negative right over here, and notice right over here that downside resumption arrow right there. That just shows you the negative condition here in the soybean market, likely to be moving to the downside. Upsides attempts likely to fail, like a little one we had here today. This is a bad looking market. We'll keep our target at around 1335 on the downside in the soybean market. That is the hot minute. This is a special level 1 membership, 50% discount. This is a great introduction to our services, education, and analysis, specifically for people that are new to what we bring. And also, if you're a free member on our list, this is a great opportunity for you. This is for 1 week only. You're going to get our Slimulator Momentum Tracker. It has over 1,000 symbols where you can scan and sort with our proprietary momentum indicators. Our stock index report, that is daily. Matt does an amazing job on this, and he's going to give you technical analysis and our charts on the major indexes. You'll get our Spider ETF review, that's weekly analysis on major sectors. You're going to get our workbench where you can work in there, organize, prioritize, save, and track your analysis. You will get our Market Week Show archive, so you can go in there and review all of our work, style, and analysis that we do. And you will be getting our live shows. You can then participate, which we do every 2 weeks, and it's 70 minutes that are just packed with Q&A, and you can bring your questions and see the teaching and analysis that we bring on the market, and you'll get those replays. Plus, you'll get special member videos and access to the askSlim Discord server. All of that, amazing. 3 months, $30. It's only $10 a month, 1 week only. Go to askSlim.com to join. Go to the top of the main page and click that Learn More button. There's a lot of description on that page. You'll be able to see everything that you get in this just amazing deal. $10 a week for all of this. You have any questions on that, write to Matt at askSlim.com. We're going to bring you the analysis on the stock market coming up, but first, some important information. Please do look at this slide very quickly. It gives you the information about our approach to analysis and some other important things. So take a second and read this. All right, stock market, S&P 500, short-term view, actually looking at SPY, not the SPX, so have to fix that slide. So we'll take a look here at the daily chart in the SPY. And this is just so interesting because what it has here are cycle analysis. And for those of you that are our members, I've added in this cycle that looks to be repeating on this dominant cycle. This is a 52-day cycle, and this is 52-day harmonic families that you see in here. That's broken down into 26-day right in here and 13-day right here. And you can actually see when I zoom in on these cycles how they are laying out really very nicely. Let's take a look here at this middle cycle right here. You could see the low here and the low right over here. And then you look at the intermediate cycle, the half cycle right there, and you can see how that forms right in here. You could see the next one right in here, the previous one right here, just beautiful cyclicality there. And then this 13-day average cycle, right? Remember, it's averages, and you can see 1, 2, 3, 4 of them in that cycle, where all 4 of them were nesting down here. It brought some selling right there. The same thing happened here. 1, 2, 3, all 3 of them, pointing right over here to the downside where it was nesting, and you got that bigger sell-off right there. So that's where they nested right in here. This is where they nested right in here. And yes, that's coming up right in here. And that is in alignment with what we have shown you as a dominant weekly cycle in the Russell and the FEZ. And that really points to us to the likelihood that once This minor cycle right in here, that minor quarter cycle, is done on the downside right in here. That might be a day or two, something like that. Then there's likely to be one more little attempt right over here. You could see that right here where it got one more little attempt, and then it failed right in there, and it fell pretty hard. That was a good 6-day hard sell-off, and that's kind of what we're looking right in here. So we're looking like at a 1 to 3 week, a 1 to 3 day daily cycle in here. We're looking at a daily cycle at about 1 to 3 weeks right in here, where it rallies up for a week here, it sells off here for about a week, and then begins to move up right in there. Now, this area right in here, this is where we think it's going to be moving up to our projected high for the year, which really lays out to about 425 to 431 when I look at on the weekly charts. So 430 has been our target since we did our big picture analysis at the beginning of the year. So we're kind of sticking to that. So that makes this area into this intermediate support zone that comes off the weekly as a likely buy area. That would mean that if you were, we'll call it a short-term to intermediate swing trader, then we're looking for a downside swing right in there, which is likely to get you somewhere down from like 415 or 420 down to this area of about 400. Pretty good decline that is potential there. And then from 400 up to 425, 430 sometime out over here as you get into the mid to late summer. So not only are these 3 cycles rising at that point, you can see that right over there, but there's probably going to be another whole harmonic family out there that points to that rise somewhere out in the summer. That could be a lot of range trading in here because we're really only looking for the potential of, maybe 3, 4, 5% on the upside, and from these levels here. And then, of course, as we said in the beginning of the show, potential for a very much weaker period as we get out later in the year. So again, you can see in here, as I blow this out again, the beautiful cyclicality that is in this chart. And as we go, we're looking back here into September of last year. So it's looking back pretty far. And that period of important resistance right up over there. And one more time, I just want to look in here so you get an idea of these cycles or that harmonic family right there, and where those resistances are right there, and the likelihood that the next cycle out over here will get to higher levels outside of a dip. Again, our 2023 target for the year that we put out at the beginning of the year was at 430. We thought this would be a year that would be, a good portion of the year would be positive with more risk later on. And here's these fib extensions right over here. Note the gravestone doji right there, which really set that peak. And I don't know that it's going to be able to get above that level here before it gets into a bigger decline right over there. These are fib extensions right over here that come off of these cycles right in here. And in our level 2, 3, and 4 library that's accessible to you, we do teaching around how to do these fib supports, fib extensions. It's all important information for traders. And of course, included with our level 1 membership that you could get for just a very minimal amount of money. So again, you can see these targets in here and how we do this, and you can get this information actually every single day by taking advantage of our special. This is the level 1 special membership, 50% discount. This is for 1 week only. You'll be able to get level 1 for just $30 for 3 months. That's $10 a month. You get everything that's listed on here. And the real key is you're going to get the stock index report daily. Phenomenal work by Matt every single day, which brings you to the technical analysis that I'm showing you, charts on the major indexes and tons of other information, all for $10 a month. Go to askSlim.com. top of the main page. Click Learn More. There's tons of information there for you, and you'll be able to sign up for this. If you're a free member, this is perfect for you. If this is the first time you've been here or you've been watching and you never became a member, well, this is the way that you can really begin to learn and adopt the kind of work and teachings that we do. Our goal is to make you more successful because your success is our success. That's it on this special and for the week. Please do go to askSlim.com and get that level 1 special. Subscribe to our channel on YouTube. Like this video, give it a thumbs up, and watch our member videos and the playlists on Twitter. Follow us at askSlim. And any questions you have on everything we presented here, I want you to write to Matt at askSlim.com. Matt at askSlim.com. He will give you all the information that you need. That's everything for today. I want you to be so incredibly careful. It is so crazy out there. And I'm always wishing you great trading.
Well, I'm going to sit and I'm